Assalamualaikum. We are from Group 3 and we will discuss about property, plant and equipment analysis. Let's go through together. Jentayu Sustainable Berhad, or formerly Ibmuda Berhad, is a provider of building and construction solution. It was established in 1975 and ensuing listing on Bursa Malaysia Securities Berhad in 1993. Their headquarters is in Kuala Lumpur, Malaysia. Jentayu Sustainables offer investment holding, trading of home improvement materials, constructing and assembling industrial control instruments, and engineering equipment. It offers service including property investment, warehousing service, property development service, and interior fit-out service. The company vision is a sustainable energy industry leader with regional footprint, helping nations adopt clean energy solutions in line with their sustainability agendas. One of the company missions is to participate in the development of medium and large-scale sustainable energy projects, regionally and globally.
Next, types of PPE in Jentayu Sustainable Berhad and the amount. Number 1 is freehold land and building with the amount 971,000. Number 2 is plant machinery and tools with amount 2 million. Number 3 is office renovation, furniture and fitting, and the amount stated in the statement was 2,572,000. And the last one is office equipment and computers with the amount 164,000.
As we can see, the data of inventory turnover ratio in the slide showed that from year 2020 to year 2021, Jentayu Sustainable has a decreased amount in inventory turnover, which we allocate of year 2020 as 16.6 times and year 2021 as 6.35 times. But it has a huge increase in year 2022, which means that the company has sold and replaced 18.04 times during the period of 2022. As for return of asset ratio, we can see the data increasing from year 2020 to 2022. In year 2020 and 2021, the company get negative figure, which is negative 31.01% and negative 8.35%. However, in year 2022, the ratio increased to 19.54%, which means that Jentayu Sustainable is a profitable company in relation of its total asset.
So I will explain the main PPE of asset of Jentayu and discuss their value and impact on the company. As we know, Jentayu have two primary PPE assets, which are freehold lands and buildings. These assets are the main role in the company's operation and financial success. The first significant impact of this PPE asset is number 1 is freehold land is not depreciated because freehold land is assumed to have an unlimited useful life. An increase in the value of the land on which a building stands does not affect the determination of the depreciable amount of the building. Number 2, when you purchase a freehold land, this gives you the freedom to make changes to the property as we would like. But in the certain structural changes are subject to the approval of the relevant town planning authorities. As per Jentayu company, it is reasonable because the company is a provider of buildings and construction solution. Number 3, lastly, despite the real possibility of the government reacquiring property, often at the price determined by their choice by the choice of valuers, it is because the freehold properties continue to yield the highest rate in the capital appreciation and rental. Next, we are going to explain about accounting treatment under MFRS 11C and MFRS 13C. We are going to focus on the measurement of PPE of initial recognition and subsequent measurement. Under initial recognition, the classification of financial asset at initial recognition depends on the financial asset contractual cash flow characteristic and the groups and the company's business model for managing them. It refers to how they manage their financial asset in order to generate cash flow. For subsequent measurement, the financial asset and amortized costs are subsequently measured using the effective interest method and are subject to impairment. Gains and losses are recognized in the profit or loss when the asset is recognized, modified or impaired. In the Jentayu annual report and the notes to the account, it is stated that their property, plant and equipment are initially stated at cost less accumulated depreciation and any impairment losses. MFRS 13C define the recoverable amount as the higher of the assets of cash generating unit, fair value less cost of disposal and value in use. For MFRS 103C, impairment happens when carrying amount is bigger than recoverable amount. Recoverable amount identified using two methods. Using at a fair value less cost of disposal, it is to recent market transactions are taken into account if available. If no such transaction can be identified, an appropriate valuation model is used. And value in use is to estimate the future cash flow are discounted to their present value using a pre-tax discount rate that reflects current market assessment of the time value of money and the risk of the specific to the asset. It is stated in the annual report that recoverable amount for PPE is based on fair value less cost of disposal method. So the MFRS 11C and the MFRS 13C is applicable in Jendayu reports pending.
I will explaining about the disclosure in notes to account. Firstly, is about measurement whether Jendayu using revaluation model or cost model. As what I found in the financial report, Jendayu Sustainable Berhad is using the cost model because in the notes to account 3.2, page 155, PPE are stated at cost less accumulated depreciation and any impairment loss. Next, depreciation for Jendayu is disclosed on the depreciation method, useful life, residual value and also rates of PPE. The company is using straight line method to calculate their depreciation. Moving on to the last part, is the disclosure useful for the potential and existing investor? First, from the perspective of asset revaluation, this information can assist the investor to make a judgment regarding the quality of the asset and estimate the intrinsic value of the company share. The second one is this information also can help investor to understand how the company depreciate the PPE over time. It is important for the investor to know about the depreciation because it can help the investor to accurately evaluate the company real value.